Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Foreign investments plunged to nearly 28 billion pesos in the first quarter of the year as uncertainties mount from U.S. President Donald Trump's sweeping tariffs. A major business group urges newly elected lawmakers to pass key economic measures to strengthen Philippine growth and competitiveness. And Hollywood icon Robert De Niro calls for protests against President Trump, taking aim at his policies during a fiery speech at the Cannes Film Festival. Let's take a look at how global markets moved overnight. Wall Street ended mixed on Thursday as gains in Cisco Systems following an upbeat forecast were offset by a sharp drop in United Health. The insurer slumped to a 5-year low after the Wall Street Journal reported that the U.S. Department of Justice is investigating the company for possible Medicare fraud. United Health says federal prosecutors have not formally informed them of a criminal probe. Investor sentiment for the stock has been fragile since December, when United Healthcare CEO Brian Thompson was fatally shot in Midtown Manhattan on his way to the company's annual investor meeting. Federal prosecutors say that the suspect, Luigi Mangione, was carrying a notebook expressing hostility toward the health insurance industry, particularly toward its executives.
Right now, the market's trying to figure things out. We do foresee some instability throughout the rest of the summertime. We're going to have to see how the economic numbers play out, both from employment, sales, and then also with the overall economy. Are we GDP? Are we expanding? Are we retracting a little bit? That'll give us some gauge on where things are going. Right now, caution is the most important word of the day.
The Dow Jones Industrial Average climbed 0.7%. The S&P 500 gained 0.4%, while the tech-heavy Nasdaq went the other way, down by 0.2%. Over in Europe, markets closed higher. London's FTSE 100 rose 0.6%. Germany's DAX higher by 0.7%, and France's CAC 40 inched up by 0.2%. Here at home, approved foreign investments plunged to nearly 28 billion pesos in the first quarter of the year, an 82% drop that sharpens worries over the Philippines' ability to attract global capital amid rising geopolitical risks and trade uncertainty. The slump underscores the fragility of investor confidence at a time when emerging economies face intense competition for funds in a high-rate, high-risk environment. Data from the Philippine Statistics Authority, or PSA, shows foreign investment commitments fell to 27.8 billion pesos, down from 155.26 billion in the same period last year. Calixto Chiquiamco, president of the Foundation for Economic Freedom, says that the decline reflects growing geopolitical uncertainties and trade disruptions tied to U.S. President Donald Trump's tariff policies. Economists warn that sustained weakness in foreign inflows could impact the peso, job creation, and the country's medium-term growth trajectory. Philippine inflation is seen staying within the Bangko Sentral ng Pilipinas' 2 to 4% target until 2027, a positive signal for price stability, policy direction, and long-term investment planning in an otherwise volatile global environment. The outlook provides breathing room for the central bank to support growth while keeping consumer costs in check, a key consideration as developed nations struggle to tame sticky inflation and emerging markets compete for capital. Economists surveyed by the central bank say inflation is expected to settle at 3.1% in 2025, 3.3% in 2026, and 3.4% in 2027. The BSP notes that respondents see upside risks from geopolitical tensions, changes in global trade policies, and adverse weather conditions. However, they also flagged downside pressure from stable or lower rice prices, which could help moderate overall inflation. This stable inflation trajectory will be crucial in guiding future decisions on interest rates, credit growth, and fiscal support, and in maintaining confidence across consumers, investors, and businesses. Oil prices fall on Thursday after U.S. President Donald Trump says Washington is close to a nuclear deal with Iran, a development that could increase global supply and ease fuel-driven inflation in oil-importing countries like the Philippines. Brent crude futures dropped $1.56 to $64.53 a barrel, while U.S. West Texas Intermediate crude slips $1.53 to $61.62 per barrel. Trump made the statement after Iran completed its fourth round of talks with the U.S. government. Washington says it wants to avoid a military strike by Israel on Tehran's nuclear facilities, a scenario that could disrupt global energy flows and send oil prices surging. For the Philippines, stable or lower oil prices help ease transport and power costs, support consumer spending, and keep domestic inflation in check. SM Prime Holdings Incorporated rolls out 131 electric vehicle charging stations nationwide as of the first quarter of 2025, supporting the Philippines' push towards cleaner mobility and lower carbon emissions. The Bilyonaryo siblings firm also plans to add at least 50 new EV charging stations nationwide in 2025 as it accelerates its support for sustainable transportation. The upcoming rollout will expand the reach of its clean transport infrastructure to residential communities and leisure estates, in addition to its malls and office developments, strengthening EV readiness across urban and suburban hubs. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on Asian markets this Friday morning. Right now, they are trading to the downside. The Nikkei 225 is lower by 0.5%. Hong Kong's Hang Seng Index lower by a little bit more, down by 0.7%. Shanghai's Composite lower by 0.3%. And Singapore's Straits Times Index lower by as much, down by about 0.3%. Here at home, the local stock market extended its slide Thursday as investors continued to lock in gains amid mixed first quarter earnings and a lack of fresh positive catalysts in general. The main gauge fell 1.3% yesterday to close at 64.67. Now, analysts say that the downturn is a healthy correction following gains earlier in the month, but they do note that caution persists amid global uncertainty, including volatile commodity prices and trade policy shifts in the United States. Now, over the near term, the market may continue to trade sideways to lower as investors await stronger corporate guidance, foreign inflows, and clear signals on global monetary policy. Now, right now, as of 10:15 this morning, we are seeing that correction in the market. The PSE index is down by 0.4% to 64.39. The broader all shares index in the red as well. As for the sub-indices, we've got the financials, industrial, holding firms, and property counters in the red, whereas the services and mining and oil counters are bucking the market's current downtrend, with the mining and oil counter up sharply this morning, up by 1.1%. Total volume traded is at 107 million. Value is at 847 million pesos. So far, we've got positive market breadth despite the market's downturn. We've got 69 advancers, we've got 48 decliners, and 30 stocks unchanged. Now, in the currency market, the peso opened stronger at 55.67 to the dollar, higher from its previous close of 55.75. On the corporate front, PLDT reports an 8% drop in first quarter net income to 9 billion pesos as rising operating costs outpace modest revenue gains amid intensifying competition and shifting technology demands. The results reflect growing pressure on telecom players to balance infrastructure spending, digital transformation, and profitability in an evolving connectivity landscape. Total revenues increased slightly by 1.95%, nearly 2%, to 55.28 billion pesos compared to the same period last year. Service revenues rise by 2.34%, while non-service revenues drop by 8.4%. PLDT's digital finance unit, Maya, turns profitable with 127 million peso net income, while its data center arm, Vitro, sees revenue growth fueled by surging demand from artificial intelligence applications. Bilyonaryo chairman and CEO Manny Pangilinan says that the company remains focused on recovery and growth, particularly in broadband, fiber connectivity, and digital finance, which are seen as core enablers of the country's digital economy. Now, cash remittances from overseas Filipinos rose 2.6% year-on-year to $2.8 billion in March. This according to the Bangko Sentral ng Pilipinas. While the growth is positive, it's a bit slower than the 2.7% gain recorded in February. Now, to help us break this down and what it means for the broader economy, we're joined by Security Bank's chief economist, Angelo Taninco. Jello, good to have you with us.
Thank you for having me.
Okay, so Jello, the latest data from the BSP just came out. Cash remittances up 2.6% year-on-year to 2.81 billion in March, moderating but still growing. What do you make of this figure?
Indeed, it's a downside surprise. The market is expecting close to 3% remittance growth for the month of March alone. For us, our full-year forecast is pegged at 3% growth. And for 3 straight months, we have seen a deceleration in remittance growth. And we think that this can be attributed to the rising uncertainty caused by the trade policy led by the U.S., and is now also cascading towards the rest of the world. Likewise, we have the U.S. Immigration policy also kind of restrictive and therefore dampening remittance flows. In fact, we've seen remittance flows from the U.S., which accounts for more than 40% of the total, growing by only 1.1% year-on-year in March and by only 1.4% for the first quarter. This is the slowest remittance growth since second quarter of 2020, when the lockdown pushed remittances down significantly.
Yeah, well, interestingly, our remittance growth has been moderating for the past 3 months, about the time Trump took office. How much of this is because of that and all things that come with it, the weakness in the dollar, the strengthening of the peso, slower jobs growth in the United States, lower oil prices, and the global trade war, as everyone just becomes more cautious globally, and the protectionist policies are really taking center stage right now. What is your outlook for remittances for the balance of the year? I mean, the 3 months of declines in remittances, do you see that continuing?
Well, our full year forecast in terms of remittance amount is at $35.5 billion. So that implies a 3% growth, and we gave this forecast last December. But now we are
when everyone is a little more optimistic.
True, because we have seen already the downside risks emanating from the United States, and that's the bulk of our remittance flows. At the same time, we are seeing downside risk to the U.S. economy as a whole because of these new trade policies and immigration policies that are heightening trade policy uncertainty, which in turn is resulting in higher market volatility around the world.
Yeah. Are you worried that the U.S. might fall into a recession?
Well, we have a report entitled U.S. on the brink of a recession. And that's because we have seen the first quarter in negative territory at 0.3%. And that is yet to reflect the full tariff impact that was introduced during Liberation Day in early April. So this quarter, we are also seeing downside risk to the U.S. Growth outlook because overnight we saw retail sales, it's flat compared to the more than 1% growth in the prior month. We've seen producer price inflation in the red. And that also talks about potential demand weakness already taking place in the U.S. alone. So that's something that we are closely watching out for, the health of the U.S. economy, because if this turns into a negative, then that will have a negative impact on our remittance flows into the
globally. Everything's going to hurt. The downside risk on remittances they're very real. But in the second half, seasonally, because as people send money for tuition and as people send money for the holidays, the second half of the year for cash remittances in the Philippines, it's supposed to be a better picture. What's your outlook for this second half?
Historically, that's true. The second half has a bigger remittance, particularly in the fourth quarter because of the holiday season. But now we might see some tempering of that growth in remittances in the second half because we have not yet ended this heightened trade policy uncertainty. Even though U.S. has struck deals on trade with the likes of UK and China, but still you have higher global tariffs for now, and that might spill over already into the real economy. So the hard data will now may reflect that we are seeing from the soft data in terms of sluggishness on sentiment, and that can affect the consumer spend and ultimately the flows of trade, investments, and remittances.
We really look to the U.S. because 40%, 41% of our remittance inflows are from the United States. So what they do, it really matters for us. Apart from the trade policies, there are other things on the docket in the United States. There's the restrictive immigration policy of Donald Trump. There's also the proposal to tax remittance outflows from the U.S. How worried are you about how all of these might affect our remittance inflows to the Philippines?
Yes, that's also another real concern. That's also an addition to our downside risks that we are imputing into our outlook on remittances. Because basically the U.S. policy is really turning more inward or protectionist in a sense that they want to keep the capital internally, so which means more jobs should be generated locally within the United States, but there's a trade-off, and that is at the expense of the rest of the world. So if you tax remittances from the U.S. into the Philippines or into the rest of the world, then that will also add on to the dampening of the remittance growth outlook.
Your full year remittance forecast for 2025, your house view was for 3% growth. And that was made in December. Given how things are changing, are you going to be revisiting this forecast, perhaps decreasing it in light of the global economic conditions?
That's correct. So we are reviewing our forecast on remittances, and if we see a continual deceleration on remittances from the rest of the world because of the heightened global uncertainty still persisting, then we will likely downgrade our forecast potentially to mid-2s% for as long as there is no worst-case scenario occurring, such as a global recession. Because if that exists,
then it would be a further,
erosion
lower,
in the remittance flows. Yes.
Okay. All right. Stepping back a bit, can you walk us through why remittances matter and how vital they are to the Philippine economy in 2025?
Well, it's still an important contributor to our household consumption, which accounts for more than 70% of our GDP.
Consumption-driven.
But over time, because our economic growth has been strong and outperforming most of our ASEAN peers, and that's because of the reforms undertaken in the past on infrastructure, job creation, and more investments.
Yeah, we've seen it, and we've seen it reflected in the numbers. If you look at remittances as a share of GDP, it's already less than 10%, unlike several years ago, pre-pandemic, when it was low double digits. So this suggests that, the reforms that have been put forward are gaining traction. What are your thoughts on this?
That is true. So over the long term, or over the past 10 years or so, we have seen our economic growth outpacing the rest of the world, at least 5% or close to 6% growth, and that is driving job generation within the economy, our economy. And as a result, that makes our remittances less dependent for household consumption. So it's, in fact, we have estimated that about 8% of remittances would be a share to our GDP. Unlike before, as you mentioned, it's close to low teens share.
Yeah, and that's what we want. We want internally generated jobs so that our Filipinos, our countrymen, don't have to go overseas to find work.
Yes, and that's also reflected in the unemployment rate, which is now less than 4%. That's historically low, even compared to pre-pandemic, when it's between 5 to 6% on average.
And Jello, as we usher in the 20th Congress, this new batch of lawmakers, what are the key measures you would like them to put forward to sustain the momentum so that we can have more jobs locally?
Well, for investors and businesses, it's important that there will be more economic reforms because we have seen that in the past that these economic reforms have driven the economy to grow faster than the rest of the world. So reforms that are more long-term and not just short-term are essential in terms of boosting jobs, in terms of ensuring the growth trajectory is at within the government's target of at least 6%.
Okay, and definitely because we have you with us, we have to ask about your macroeconomic forecasts. Looking ahead, as we enter this second half of the year, what's your macroeconomic outlook for the Philippines? What's your take? I mean, we've got easing inflation. We've got Q1 GDP at 5.4% below expectations. We have expectations that the BSP will decrease interest rates. This as we see moderation in remittance inflows. What's your outlook for this second half and your forecasts for those figures?
For GDP growth in the second half, we're looking at 6%. Partly because of low base effects. Second half last year, it was only at about 5.2 to 5.3%. Secondly, we see the interest rates to be reduced further. After the BSP's 25 basis point cut last month, we are expecting 50 basis points more. The second, we think, will happen in June. And the third, 25 basis point cut, we believe will be in August. So it's a back-to-back cut that will reduce borrowing costs and therefore invigorate the demand side of the economy further. And third, inflation is benign. We have projected the inflation to be a notch below the 2% minimum target range of the government at 1.9%. So we think with the benign inflationary environment, rate cuts can continue, and that will help propel economic growth in the second half.
A supportive environment for growth as we need it. Okay, lastly, I wanted to ask you if you could implement one economic policy, what would that be and why?
I would like to have a long-term economic agenda, a 50-year plan, so to speak, that will have to include all of the important structural reforms that needed to be undertaken, such as further reducing the cost of doing business, more infrastructure development, ensuring food security in the long term, and also more trade and investment flows in terms of attracting foreign capital and more trade agreements.
A longer view that cannot be budged, not something that's administration to administration.
That's correct.
All right. Okay. Thank you for your time this morning, Jello. It's good to have you. It's always good to hear from an economist to get a temperature check of what's what.
Thank you also, Maiki.
Okay. We're taking a short break. Business 360 will be right back. Welcome back. After the recent midterm elections, one of the country's largest business organizations is calling on Congress to finally pass long overdue economic reforms, urging lawmakers to prioritize key bills that would boost business, strengthen trade, and encourage investments. Sujin Kim reports.
Following the recently concluded midterm elections, the Philippine Chamber of Commerce and Industry is once again calling on Congress to finally pass long-delayed economic reforms. The PCCI is urging for swift legislative action on critical measures that would bolster business activity, strengthen trade, and encourage investments.
Because for a while, this had been, I would not say neglected, but the attention is focused on some other important, equally important matters.
In an interview with Bilyonaryo News Channel, PCCI President Enonina Mangyo identified 3 key bills that Congress must prioritize. First, the Magna Carta for MSMEs to expand access to lower-cost financing for small businesses and remove BSP's regulatory cover over SB Corporation.
Because you have to remember, the best support that we can give to our SMEs is to provide them with a more competitive interest rate. Because remember, the SMEs is the backbone of our economy.
Second, the International Maritime Trade Competitiveness Act. PCCI argues that current shipping charges are uncompetitive compared to ASEAN neighbors and calls for stronger regulatory oversight to align rates with international practices.
Our international maritime trade competitiveness. Our charges right now are not competitive as the one that we have that our neighboring ASEAN countries are having.
Third, the National Quality Infrastructure Act to help local products meet global quality standards and improve export competitiveness.
That will facilitate our local products to the international market. Again, we have to look at our possible ways and means to be competitive in our export in terms of quality and price. And I think one of the items that we have to consider is our supply chain.
Beyond legislation, Mangyo underscored the need for lawmakers who understand the economic landscape, those who can champion business-friendly policies and create a conducive climate for foreign investment.
We only want them to really be more focused on our economic development. And because one of the items that we feel is being overlooked is our sensitivity on inviting investors, foreign investors to the country. Although our president is so serious, as you notice, he's moving around, showing the world what the Philippines is, being the investment hub in Asia or ASEAN countries. But I think we have to focus more on the industry, on the private sector.
Meanwhile, Manny Ocampo, Senior Managing Director of Investment and Capital Corporation, pointed out that several candidates in the Magic 12 have a track record of supporting economic reforms, including former Senators Bam Aquino and Kiko Pangilinan, known for their alignment with the business sector. Sujin Kim, Bilyonaryo News Channel.
The Bureau of Internal Revenue reminds candidates and political parties in the 2025 elections to comply with their tax obligations, underscoring the role of fiscal transparency in strengthening democratic institutions. BIR Commissioner Romeo Lumagi Jr. stresses that candidates must issue BIR-registered invoices for all campaign contributions received, whether in cash or kind. Candidates must also withhold a 5% tax when paying suppliers and track their expenses in detailed reports to be submitted to both the Commission on Elections and the BIR. While excess campaign contributions may be retained, they are subject to income tax. Lumagi warns that failure to comply may lead to tax evasion charges and, in some cases, even disqualification from office. Cebu rolls out key infrastructure upgrades on land and sea, including a new runway at the Mactan-Cebu International Airport and the launch of a high-end yacht service. These developments aim to boost tourism and mobility in one of the country's fastest-growing economic hubs. Our mobility correspondent, G. Baroga, has the details.
BNC Mobility hits the road and the waves in Cebu. We start at the Mactan-Cebu International Airport, or MCIA, where a major new development has just been unveiled. In January, President Bongbong Marcos inaugurated the new 2.55 billion parallel runway, the first of its kind in the Philippines. The runway is a game changer for Cebu's connectivity. MCIA has already significantly contributed to the growth of Cebu, the entire Central Visayas region, and the surrounding provinces it serves. Last year alone, the airport handled 8.5 million domestic passengers, 2.8 million international passengers, 67 million kilograms of cargo, and nearly 100,000 flights. With this new runway, MCIA is set to improve operational efficiency, accommodate more flights, and solidify its role as a key gateway for the Visayas and Mindanao. As we explore the Queen City of the South, we also caught a glimpse of progress in motion. We passed by parts of the Cebu Bus Rapid Transit System project. Much like Metro Manila's EDSA busway, this dedicated lane aims to make commuting faster and more efficient and give people a more comfortable and reliable ride. It also aims to cut energy use and emissions. We asked the Department of Transportation for the latest on the project, and while there have been a few delays, they say updates are on the way and work is very much ongoing. In fact, we already spotted some stations sporting their stylish lift-inspired roofs. Transport Secretary Vince Dizon earlier said they're all in on making this project happen, with the help of community dialogue and strong collaboration. Once completed, the Cebu BRT is expected to serve around 160,000 passengers. But wait, our Cebu trip doesn't end on land. We also got to experience something truly special, a yacht cruise courtesy of New Star Resort. Sitting right at the edge of the South Road properties and surrounded by water on three sides, New Star offers more than just luxury. It's got views that will leave you breathless.
Apart from operational excellence, apart from the physical attributes of the resort, we're in the business of creating experiences. And Crucero is one of them.
Introducing Crucero, a signature yacht cruise that glides through the calm, scenic waters of the Mactan Straits. It's not just a boat ride, it's an escape.
People run it periodically. It's open to the public, in fact, not just to hotel guests. No. It will open on a seasonal basis depending on the weather and the seasonality. But again, like I said, it's something that we pitch as one of the signature experiences that New Star has.
From city lights to ocean breeze, this cruise lets you soak in views of the now iconic Cebu-Cordova Link Expressway. That's especially magical when it lights up at night. And even if the sun decides to skip the show during our ride, the vibe stays relaxed and cozy. It's the perfect setting for good food, chilled drinks, and bonding time with family and friends right in the middle of the sea.
With Crucero Cruise by New Star Hotel Cebu, you'll catch Queen City of the South sunsets from the best spot possible, the water. Just you, the ocean, and pure bliss. For BNC Mobility, G. Baroga.
The Commission on Elections says Monday's polls recorded the highest voter turnout for a midterm election, a sign of strong public engagement in the democratic process at a crucial point for national policy and economic direction. COMELEC records show a turnout of over 80% this year. The poll body also confirms there were no reported cases of failure of election, even at the precinct level, reflecting improved poll operations and voter mobilization. Winning senatorial candidates will be proclaimed this Saturday afternoon, while winning party list groups will be named on Monday.
Tutuwa tayo dahil bagamat ito ay isang midterm election, ay nag-register siya ng ganung kadami na bilang ng mga botante natin na bumoto nitong nakarang election. Again, highest in the history of a midterm election. Nagpapasalamat po tayo sa lahat ng workers, teachers, PNP, AFP, ang ating pong lahat ng tumulong sa Commission on Elections dahil wala po tayo kahit isa na failure of election. Again, wala po tayo kahit isa na failure of election sa buong bansa sa kahit na isang presinto. At kahit po sa abroad, wala po tayong isa man sa post, sa 93 post, ang hindi po nakapag-eleksyon nitong Mayo 12.
The COMELEC reminds all candidates to remove their campaign posters and paraphernalia within 5 days after the elections as part of efforts to enforce electoral accountability and promote environmental responsibility in political campaigns. The poll body says it will file cases against candidates who fail to meet the deadline. They are also required to dispose of campaign materials properly, in line with waste management laws. The move aims to curb visual pollution and reinforce discipline in the post-election transition. Congresswoman-elect Laila De Lima says she will raise before the Supreme Court the decision of the Appellate Court to reverse her acquittal on illegal drug charges. De Lima asserts her acquittal is final and unappealable due to the principle of double jeopardy. But the CA's decision is still appealable, she adds. This development will not hinder her return to public office. The Court of Appeals 8th Division ruled in favor of the petition for certiorari filed by Solicitor General Menardo Guevara. The court says that the Muntinlupa Regional Trial Court committed grave abuse of discretion when it acquitted De Lima. We're taking a quick breather. Business 360 will be right back. Welcome back. United Arab Emirates President Sheikh Mohammed bin Zayed Al Nahyan tells U.S. President Donald Trump that the UAE remains committed to deepening strategic ties with the United States, a move that could shape regional investment flows, digital infrastructure, and strategic alignments impacting partners like the Philippines. This comes after the UAE pledged a $1.4 trillion investment framework in the U.S. earlier this year, signaling strong capital movement and partnership in key sectors. Both countries are also collaborating to build a massive data center complex in Abu Dhabi with a 5-gigawatt capacity to advance artificial intelligence. Trump's visit to the UAE marks the final stop of his Gulf tour, which included stops in Saudi Arabia and Qatar. The strengthening of U.S.-UAE ties could influence technology access, defense cooperation, and investment priorities, with ripple effects on countries like the Philippines that are also pursuing foreign investments in tech and infrastructure. A technology framework agreement is also being finalized, which may give the UAE broader access to advanced U.S. AI chips, positioning the Gulf state as a regional tech hub that may compete or collaborate with other Asian digital economies.
And I look forward to having you in the White House. We'll celebrate together, but we are going to be your friend and we're going to be your partner, and we really appreciate your confidence and an investment. That's your biggest investment that you've ever made, and we really appreciate it, and we're going to treat you very, as you should be, magnificently. And you're a magnificent man, and it's an honor to be with you.
Hollywood icon Robert De Niro lashes out at U.S. President Donald Trump for pushing tariffs on foreign-made films, a move that could reshape global entertainment markets and restrict artistic exchange at a time of rising trade tensions. During his acceptance speech for a Lifetime Achievement Award at the Cannes Film Festival, De Niro urged filmmakers and audiences to defend creative freedom and democratic values. He called on everyone who cares about liberty to organize against Trump's policies. The comments come amid growing concerns that tariffs on creative industries could stifle cross-border collaborations and affect countries like the Philippines, whose filmmakers depend on global distribution, festival networks, and cultural co-productions.
America's Philistine president has had himself appointed head of one of our premier cultural institutions. He has cut funding and support to the arts, humanities, and education. And now he has announced a 100% tariff on films produced outside the U.S. Let that sink in for a minute. You can't put a price on creativity, but apparently you can put a tariff on it. Of course, this is unacceptable. All these attacks are unacceptable. And this isn't just an American problem, it's a global one. Unlike a film, we can't just sit back and watch. We have to act, and we have to act now. Without violence, but with great passion and determination.
On another front, China urges the United States to lift its restrictions on the global use of Huawei chips, warning that Washington's move could further disrupt global tech supply chains amid rising trade tensions. The call was made by a spokesperson from the Chinese Ministry of Commerce on Thursday. This follows a new notice from the U.S. Department of Commerce stating that the use of Huawei chips anywhere in the world may violate U.S. export controls and could result in enforcement action. The Chinese spokesperson accused the U.S. of abusing export measures, saying that the restrictions are based on unfounded accusations. They warned that this move threatens the stability of the global semiconductor industrial and supply chains, a critical concern for countries like the Philippines that are heavily dependent on tech imports and electronics exports. The U.S. has yet to issue a formal statement on the matter. In other news, Ben Cohen, co-founder of the iconic ice cream brand Ben & Jerry's, is arrested after protesting the Gaza war during a U.S. Senate hearing led by Health Secretary Robert F. Kennedy Jr. The incident highlights the growing role of corporate voices in social justice movements and the rising public scrutiny over America's involvement in the Israel-Gaza conflict. A video captures the moment Kennedy jumps out of his seat as a protester interrupts his testimony. Cohen was among 6 pro-Gaza protesters who disrupted the hearing, underscoring deep divisions in American politics and the use of civil disobedience to press for foreign policy change.
Kills poor kids in Gaza by buying bombs and pays for it by kicking kids off Medicaid in the U.S.
In Bolivia, hundreds of gold miners take to the streets demanding government action on persistent dollar and fuel shortages that are disrupting commerce and weighing on the country's fragile economy. Mining cooperatives, a key driver of Bolivia's informal economy, are also calling for official recognition and inclusion in public policy to better protect their livelihoods. The demonstrations were joined by small traders and merchants facing similar pressures amid limited access to foreign currency and surging costs of basic goods. Bolivia has been battling a dollar shortage since early 2023, part of a wider strain on emerging markets facing inflation, fuel supply issues, and global monetary tightening. While the Philippines remains stabilized by remittances and export inflows, the protests reflect broader risks for resource-based and import-dependent economies amid a volatile global currency environment. Now, before we go, Warner Brothers and DC released the first official trailer for James Gunn's new Superman film, a major bet for the rebooted DC universe under Warner Brothers Discovery as the studio seeks to recapture global box office and streaming momentum. The film stars David Corenswet as Superman, Rachel Brosnahan as Lois Lane, and Nicholas Hoult as Lex Luthor, with industry watchers eyeing its potential to redefine the franchise's commercial trajectory. Here's a look at Superman. Serious? See, I'm Maiki Oreta. Thank you for joining us. Keep it here on BNC, the Bilyonaryo news channel, and have a good weekend.